Hello, everyone. This is Stephen Richardson. Today, we're going to be talking about the stock Nvidia in the semiconductor industry. Nvidia's been on a hot streak lately, and we're going to see what kind of a company it is. This presentation was prepared on February 7th, 2024. In case you're looking at this a year later, or 2 years later. If you like this presentation, please click subscribe. I'm going to have more studies going out, more education going out, and I would appreciate if you did that. Okay, this information is for training purposes only, for education. I'm not recommending purchasing NVIDIA. You need to do the research yourself. This is just information purposes only as part of a industry study. Okay, so we gather all the information on their sales growth, 10-year, 5-year, recent quarter, which is right there, phenomenal. Trailing 12 months, also phenomenal. And the value line, the 2-year ACE, which is right there. And we go to the website's value line, Yahoo Zax, and the number of analysts looking at it. So value line saying 32%. So I went with 32%. There's a lot of percentages that are higher. Certainly their quarterly growth is explosive, but I wanted to do something conservative, and I thought Value Line's number was conservative. And so here's this growth line here. See how explosive it is? That's a sharp angle right there. Okay, we'll go to earnings per share. So gather all of your data. Here's the 10-year, the 5-year. Here's the recent quarter. It's over 1,000%. That's crazy. And trailing 12 months, that's crazy for trailing 12 months. And then you have the EPS from the Better Investing, their estimate. So you go to the websites for Market Watch. You have to calculate Nasdaq. You have to calculate. You take their projection plus what they earned in the last year divided what they earned in the last year. Earnings per share, and that gives you the percentage, which you can see. Same for Nasdaq. Same for Yahoo. So they're pretty high too. Again, I wanted to be conservative. I chose value line was 42 and a half, but I raised it up a little bit more to 50%. And I think that is still conservative. And this is a 5-year estimate. Can they keep doing that for 5 years? You look where I put the number, and it's a little bit steeper than the average, that blue line right there, just a little bit steeper. So, but it's in line. Okay. So now we're going to do the projection recap. We put in 32 and 50. We came out with 108,000, 108. It's going to be billion, 108. Yeah, billion. And then we think that earnings per share is going to be $13.21, 5 years out. And these are what the lines look together. Never mind this. That just when I snipped it, that was up there. And you can see their pre-tax profit is going down. 2022, something happened, something strange. We're going to need to look at it, but it's been pretty consistent. The pre-tax profit and return on equity, decent. Again, something happened in 2022, and then but that's been consistent. And then the debt to capital jumped up in 2022 over 30%, but the average is 26.5. So it's worth holding, or it's worth considering it, even though it had 35%. We'll see next year, 2023 year, what that percentage is for their debt. Okay, here's the price earnings at a glance. I took out 2022 because they were ridiculously high, and see, I just don't understand this. If 2022 was so low and the debt's so high, how do they have such a fantastic year? Maybe they had stock buyback. How did the earnings wasn't that much, higher than normal on their. It was consistent what they give out, but it was higher than normal on the payout because they earned so much. That's why. But why did they suffer on return on interest and debt and pre-tax profit. That's something that has to be looked at. Yeah. So I'm excluding those two from these calculations. Current PE is 90, which is more than twice the industry average. Can they keep this up? I don't know that they can keep it up that long. Um, Trailing 12 months earnings is 758. You see that right here? So far, it is. Well, I mean, the trailing 12 months. So that's going to be much higher than, okay, yeah, much higher than the annual. So they've been giving out generous dividends in the quarters. Okay. Um, or sorry, earnings. They've had very strong earnings in each quarter. Okay. That high price between 2022 and 2018 is staggering. It's by a factor of 4. Factor of 4. So it doubled, then doubled again in 5 years. Crazy. A dividend is just, like I said, it's really meager. Not very good. At least better than something, and it's not increasing year over year, which is not good. Okay, looking at the price earnings data, um, we take our projection here, the 10-year EPS projection, or actually what they did in 10 years. And then, is that right? Let's go back and look at that. Yeah, 35.2. Yep. Yeah, 30. So this carries it over. And then we enter these numbers, the current, the average, the high, the low, and sector and industry is what we've been studying, right? S&P 500, that hasn't changed in a few days from when I first got it. And then the peg ratio, it's overvalued. Because if it was less than 1, it would be undervalued. And value lines trailing is PE is 53. It's pretty high. But look where they were 5 years ago, and just it was a good climb and then a rocket climb. Um, that chip shortage, I think they cracked the code on how to pump those chips out. Is what I think. So let's look at how we calculate the high and low. So you click on that box, and the SSG, the green box, and this pops up for the high, and it conveniently shows you the current, the 5-year average, and the 5-year average high. So I calculated a 7 just to be conservative. 70. The 5-year high was 69, and that gave me $924. Um, Steadily been increasing its price earnings, as you can see here, just steadily increasing. Crazy for 2022. Need to find out why it lost that, that pre-tax profit was down. They maybe had payouts for options. That might be, but it's heads and shoulders above. Well, not Advanced Micro. Advanced Micro had a bust out year. Um, so so that's how I calculate it. 924. You'll need to do your own calculation. How you're going to do that? Okay, so when you click on the low box, this pops up. You can use the low. You can just pull it out of the air, put it in there. You can calculate it here. You can take the recent low, take the average low, or you can take the what a, what a price dividend will support. So I looked at their current is 90, 5-year average 47, average low 26. So again, I wanted to be conservative, so I said 30. Maybe conservative, I should have put 40. Anyways, so I gave us a 227.4. Um, they're very consistent, so that's why I put that 30 there. You can see this. This has been taken out. Did I take out that high? Wonder why that wasn't taken out. That should have a red X there. Wonder what happened. Okay, so we fill in the what we guessed 70 and 30, what we projected, right? And then Nvidia underwent 5 stock splits. Most recent was on July 20th, 2021. It was a 4-for-1. That's pretty generous. Can Nvidia go to 29.24? What is that? Can it go to 924.7? 924.7. I don't know how I boofed that. I think it could. What's its current? One something. 100 something. Okay, so the zoning, this is an aggressive zoning, one third, one third, one third. Conservative would be 25, 50, 25. And it's in the hold zone based on its current price. To show it here? No. Yes, 682.19 is the current price. Okay, so you look at here's the fair value assessment, 2 stars by Morningstar. Its fair value is 480. So where we placed it in that bar graph was based on our calculations. 682 is almost in the sell zone, but CFRA Global Net Advantage Standard and Poor's, the stars report is saying it's a 4-star buy. Uh, so you're going to have to make the upside downside ratio is 0.5 to 1. You're going to have to make your own. Maybe I was too conservative. You're going to have to make your own judgment there. All right. So here are the dividends. We already know they're measly. So it seems like they're preferring an average 9.2% payout. 5-year average debt of 26.5. However, most recent 35.2%. Uh, oh, it does have a wonky 25 billion stock buyback program, which has shareholders scratching their heads. That I think that's it. Why those pre-tax profit was so low. But 25 billion is crazy for 1 year. But it's very impressive 2023. So this has been my study of Nvidia, and now the next time we meet, we're going to put it all on a stock comparison guide. All 5 stocks, 3 from the previous and the 2 that I just did, because those industries are so similar. If you like what you saw, click subscribe. Tell your family, tell your friends, tell your enemies. Thanks, and I'll see you on the next one.